All right, so beginning exercise 2.10, we're going to prepare a statement of owner's equity and a balance sheet. So those are steps 2 and 3 in the financial statements at the end of the month. The directions say to use the exercise 2.8 information, and we had already in 2.8 done the income statement for Cantu Wealth Management, and we came up with a net income of $109,200. And yeah, so refer back to exercise 2.8, and we're going to move on from there with our statement of owner's equity. Now we have to look at the bottom of page 41 in your textbook, and we need to look at the accounts that are listed in the exercise 2.8. We were given all of them at that point, but we didn't need them all just to do the income statement. With the statement of owner's equity, we start our financial statement with the name of our company, as usual. Consulting, not counseling. And the second line is what? Statement of owner's equity. And the last line is month ended. September 30th. So what we're trying to show here is in the month of September, what was our company worth at the beginning of the month and what is it worth at the end of the month. That's all contingent upon our net income or loss, and if there was a draw for the owner during that month. All right, so this financial statement is straight up the same every time. So we start with the capital at the beginning of the month. I'm running out of room here, so I'm going to abbreviate just a bit. Okay, and that number goes over on the right hand side because it is our starting number. Our capital at the beginning of the month, we look back on page 41, I think it was, and we see our capital was $53,400. $53,400. Okay, then the next line would be net income or net loss from our income statement, and we know that we had a net income for September. We're going to put that number in the first column because we will do math with our withdrawal. So that was, our net income was $109,200. The third line is less withdrawals. That means the owner of the company took money for themselves, which is sometimes like on a scheduled basis, and sometimes it's quarterly, and sometimes it's as needed. In this case, there was a drawing of $18,000. And now we need to do the math. And we're going to have our increase or decrease in capital. In this case, we still didn't take a drawing of more than what we made in our net income. So it's going to be increase in capital is our fourth line. And we're going to put that number in the right-hand column. So we subtract 18,000 from 109,200, and we get 91,200. And the last line is the same as the first line, only September 30th. So Selena into capital September 30th, 2019. Now we do the math in the right-hand column, and we add together the beginning capital and the increase in capital, and we should come up with 144,600. And then a double underline because that is a total. Okay, then moving on, we need to take that number, and that's part of our balance sheet. And I will put that in a separate video because I need to load the document.